Thank you to Red Cloud for having us here, but even more so, thank you to everyone here who's listening to this, to the companies here that are presenting today and hearing our story. Being one of the longest Athabasca players in the space, being over 20 years with 5 production visible projects. We're really, what's really exciting us today was our announcement last week that we're teaming up with UEC to form the largest diversified North American uranium mining company. So we're gonna, instead of focusing on UEX specific, we'll talk about what the new company is gonna look like going forward and what the strategic advantages are. So the usual disclaimers, both for Canadians and Americans. So please keep that in mind as we go forward. The company together, we're going to be looking at a company that's going to have about 300 million pounds worth of uranium under its jurisdiction or under its ownership. We're doubling, both sides are essentially doubling the amount of resources they have. We'll be establishing presence not only in Wyoming, Texas, but in the Athabasca Basin. We have partners with the major players like Cameco and Orano. And what it forms is a company that's really unique in the fact that it has near-term production-ready assets with almost no capital needed to get it rolling to produce up to 4.5 million pounds a year, with the long-term, medium-term production potential that's coming out of Canada through UEX's assets. So we'll be in 3 of the world's top jurisdictions, production ready, very, very strong balance sheet. UEC has over $180 million US in their balance sheet today, and production sources from 3 sort of hubs. Excuse me. The transaction, UEC is going to buy all UEX shares at a share exchange ratio of 0.831. That's a 50% premium on the transaction day, Monday. So UEX shareholders get that immediate premium, and we see it in the market today over the last week or so. But also, more than anything else, it exposes shareholders to that production portfolio and multiple bumps. We think, certainly we've been hearing from our management point of view, why aren't we performing like the rest of the market? That premium gets us there. The UEC angle also, being teamed up with UEC also gives us the opportunity to re-rate the pounds in our portfolio. And as you've heard from, and you will hear from guys like Dave, moving forward, the market is moving in the right directions. This deal here, we've called the shareholder vote which is all is required to get the approval done. There's no vote needed on the UEC side. We need 2/3 support from shareholders, and that's going to be held on August 9th in Vancouver. And they have the usual customary non-solicit and termination fee type issues you'd expect in a deal like this. And of course, stock exchange approvals. And for those people who are asking, there's potential for Investment Canada approval as well, although we sit well under the threshold needed to get to the finish line. So it's more of a, hey, we're doing something. But I can't imagine in the world of our free trade world with the US and the fact that Canadian mines or Canadian operations own a lot of US uranium mines, that this is going to be an issue. I don't want to get into the market, but the invasion of Ukraine has certainly changed the view of the world. I think both UEC and UEX are of the opinion that we're heading towards some sort of bifurcated market like we saw back in the Iron Curtain days, whether it's formal through regulation or whether it's informal through consumer choice about whether they want to be exposed to Russian supply. We'll wait and see. But certainly there's never been, I think despite the Russian issue here going on, in my career in the uranium industry, and I would imagine everyone else feels who's been in the industry as long as we have been and longer, will say that nuclear power in terms of its cleaner energy benefits, et cetera, has never been more accepted in the world than it's been today. And that's pretty interesting. Meanwhile, while there's growth happening in this space, source of supply and energy security is becoming paramount. And that's why we like this idea of being part of a North American focused uranium supplier. Like I said before, 300 million pounds roughly of measured, indicated, inferred resources, combined multiple sources of production. The earliest ones require very minimal capital. They're pretty much turn the tap on in Texas and Wyoming to get up and running. We're exposed to near-term Athabasca production potential with Wheeler River, Cameco's next development project at Millennium. It's a pretty impressive portfolio of opportunities, and we think it creates a unique investment vehicle for investors. Little capital outlay to get production, 4.5+ million pounds of production potential in the short term, and lots of growth through 3 key hubs, the Athabasca Basin, Wyoming, and Texas, with other opportunities as well in Arizona, even Paraguay and Nunavut. Not only that, what we bring to the partnership and into our portfolio is some exposure to Cameco and Orano through our partnerships at Shea Creek, Kigavik, and Millennium. These will allow those developments, since they're the operator of those projects, it'll allow UEC to continue to focus on its core assets in the United States and growing our portfolio in Canada through additional discovery on our low risk exploration portfolio, things like Christie Lake, Shea Creek, and Hidden Bay. What it does from an investor point of view, we move up on the measured indicators or resources to one of the highest in the entire industry. It's also a very liquid stock. UEC alone, before the inclusion of UEX, is going to expose UEX shareholders to increased liquidity as well, and will be way up, as an investment choice, right up there with the Camecos of the world. Like we said, the one who, largest North American focused. When you look out there are Canadian focused companies. There are companies like Cameco that are focused in Canada, US, but also in Kazakhstan. We'd be unique in the space that having both exposure to American pounds and Canadian pounds, I think is an incredible opportunity for investors. And what we bring in addition to our 5 visible projects, promising development assets that will sustain the company and help it grow in the long term. We expose UEC to the Grand Slam home run potential of the Athabasca Basin as high-grade deposits that have yet to be discovered in our portfolio. They bring operational expertise, obviously, in the US. We bring that same exploration expertise in the Athabasca Basin, and a very large package of land that was, for the most part, put together before the last cycle on all of the key corridors you want to be in both the eastern and the western Athabasca Basin. So once again, just to summarize things, we think it's an accretive transaction because there's very little overlap between what we do and what they do. Both our teams will be sticking there. We'll still be in the new pro forma company. Minimal dilution to the UEC shareholders, exposure to upside growth through that. Just the premium we're getting here for UEX shareholders, the re-rating of our pounds under the UEC banner, and where the general market is going. Strong joint venture partnerships, exposure to production-ready assets with minimal capital outlay. You're talking a couple of millions of dollars, not hundreds of millions of dollars to get there, and a very, very strong balance sheet. So with that, I'll turn it back to you, David.
Yeah, nice, quick one, Roger. Thank you very much. That helps us get back on time here. So.